Hello and welcome to Crypto Weeklies. In this video, we analyze Polkadot and its token DOT. None of the content financial advice. Right now, price of DOT is at around $1.55. This analysis was requested by one of our community members. So, if you are interested in me covering a few of your favorite cryptos, please mention them in the comments and give this video a like and subscribe. So, DOT right now is down from the 2021 high, 97.5% almost. 2021 high for DOT in November 2021 was at around $55. There was a bull run in 2024-2025 time period, but DOT did not even make to the 0.23 fib level, even drawn from the 2025 lows and the 2026 lows. So the 0.236 level for DOT would have been at around $14, whereas the peak for DOT came in March of 2024, the first alt season, at around $12. That's being generous. Since then, again, price has been pretty much in a downtrend. There was a breakout. At times, it looked like that breakout would have been sustainable when the price held the 20 weeks 20 week simple moving average and the 21 week exponential moving average as support, but it all came crashing down in April 2024, and then largely it was series of resistances at that level, a final breakout in December 2024, and then almost entirety of 2025 was spent below the 20 week simple moving average. Typically a bullish year for altcoins, the post halving year, that is 2021-2025, but 2025 largely was bearish for DOT and much for all of the altcoins as well. Right now, if the price, again, the bottom analysis for DOT has not meant much, again, although there was a series of lows which were again closer enough to that $4 target, but that also got breached in October 2025. Those lows did not mean much, and then now newer lows are set for by DOT at around close enough to $1.50, let's say. Since then, now the price action still hasn't gone to the 20 week simple moving average since October 2025, so it has been the entirety November, December and January. So there could be one counter trend rally back to the 20 week simple moving average. If that kind of rally is ahead of us in terms of the price going to that level, could mean a rally from here. If the 20 week stays constant, a rally of about 60-65%. So that's in a bear market. If that kind of counter trend rally were to occur, that would not be the worst kind of rally. Similar rally did occur for DOT in 2022, which was again 4 years before 2026, when the first lows occurred in late February 2022, and then from that low there was a rally back to the 20 week simple moving average in late March 2022. So if something similar were to occur in late March of 2026 or even early March of 2026, because everything in 2025 got shifted by 1 month, the peak for altcoins or Bitcoin majorly in 2021 was in November, whereas this time around, this cycle around, Bitcoin topped in October of 2025 over here, when the price action came to that $125,000 target. Now, what does it mean for DOT? Right now, the 200 week simple moving average, this white line over here, has been a downward trending line. That is because over the last 200 weeks, that is over the last 4 years for DOT, the price action has been essentially in a down only trend. So as we replace the candles over here with the candles to its right, these candles are of much lower price, as well as the current candles are also are much lower price than historically speaking. So I would imagine that the angle of descent for this 200 week simple moving average, if not the current descent, it could only go sharper. So this 200 week simple moving average could be somewhere close to the $2.60 in late August to September 2026. By then, the 200 week simple moving average and the price action, if there is a counter trend rally that late into the year of 2026 for DOT, could be a 60-65% gain even in the middle of a bear market. That's just an analysis. Coming back to our own website, cryptoweeklies.com, link on the bottom of your screen. All of the charts over here from now on are available for free, no sign-ups or anything required. If we go by the overall risk profile for DOT, these are some of the key moving average, and then we will normalize that risk based on the behavior across the key moving average. The 20-week simple moving average over here, that is at around $2.50 as we discussed. The 100-week is at around $4.84. The 200-week is at around $5.60. That's the 76 cents. That's the 200-week as we discussed it in the white line over here. If the price action were to go back to the 20-week, that's a 60% gain. If it were to go to the 100-week, that's $4.84. Roughly speaking, in terms of the price action going to that $4.85 level from here, could be a return of about 220%, and the return, if it were to go to current valuation of 200-week, is at around 260%. The normalized risk for accumulating DOT at this point, as a series of all of these individual moving averages, trying to normalize the behavior of Polkadot and DOT's risk. You can see in 2021 December, this model did flag all-time high on the normalized risk. That's because the price action came not just close to the 100-week, was close to the enough to the 200-week at one point. Which was quite risky for DOT to do that in that in the late halving year and early post halving year. So now, if we were to look at the overall risk for accumulating DOT and just look at the other moving averages as a guideline, for now ignoring the price action for a moment, the accumulation risk for DOT has gone down quite a bit. It's at around 0.02. That means only 2.5% risk at this point. That's just using moving averages and historical relationship between the price and moving average as an evidence. The time weighted average price also, this is the time spent at some of the key price and the price multiplied by the time spent to get a time weighted average price, where this blue line over here has been a consistent level of resistance. Price did not go to that level, but they came close to about 10 to 20% in the vicinity of that time weighted average price. If it were to again come back into the vicinity of the time weighted average price, this is the time weighted average price at around $10.80. If it were to come again meet the price action in late 2027 or 2028, imagining just an extrapolation over here at around $8, that would be the time weighted average price at that point. And if price action were to come close to the $7 level, a $7 DOT from here, let's say over a longer time horizon, a $7 DOT is at around 470% gain over here, roughly speaking. That's a 5.7x of the current price. Now looking at a DOT from the regression based risk level. So this is the regression based fair value, the gray line over here. Whenever this DOT price action came close to the dotted red line, like it did back in December 2024, our models, again, these are live models, they do extrapolate into the future what the future regression would be. Again, in the middle of the year, again that $4.70 number is coming back into the equation. That means if in 2026 the price action goes to $4.60, that would be a 200% gain, and in terms of that would be a 3x or a 200% gain over the current price. So again, if that doesn't happen in 2026, maybe in 2027, still the percentage would stay more or less the same. Right now the regression based risk is at around 0.12. The rally to the fair value would be at around $2.50. As mentioned earlier, that $2.50 is where the key moving averages, such as the ones discussed previously, the 20-week simple moving average in terms of the price action over here is at around $2.50 over here. So that's another area of confluence for DOT. The 20-week simple moving average risk is still not as low as it was back in June 2022 or even in June 2023. That's because again, even the price action is below the 20-week simple moving average, the ratio of the drop is not that severe. The estimated bear market bottom, before we conclude on a bullish note, the estimated bear market bottom for DOT, again, these were estimations drawn historically. The bear case for DOT was at around $5 level, which again, right now the price action is 200% below that value. So again, just to get to that base bear case, the rally would take the price action around 220% higher of the current price. That was the base bear case. Again, base case for DOT was $5, but DOT did perform poorly in 2024 and 2025. That's why the drawdown is much sharper than the base bear case. The panic case for DOT from here on is at around $16, and the worst case recessionary bear case for DOT is at around 93 cents, which is about 40% down from the current price. As the price action is significantly below the time weighted average price, and all of the risk for DOT is much related to what Bitcoin and ETH are doing and how they would bottom in 2026. Accumulating DOT per this model is still always going to be risky, as DOT is an altcoin. The drawdown could be severe, as high as about 40% from the current price as estimated by these models. If the market were to recover and if altcoins were to participate in a decent rally in 2028-2029 time period, the base bull case for DOT in that environment is somewhere between, base case is at around $13.50, the bull case is at around $14. So in that narrow range of about 50 cents, which is about 8.5x and 9x of the current price, that's a healthy gain if these models were to be proved right. The stretch goal for DOT is all the way at around $22. That would be a 14.5x of the current price. With that, I'd like to conclude by saying, although some of the models are pointing to especially the technical models on the moving average are pointing to a lower risk, as and when ETH and BTC bottom for 2026, that process has not been completed yet. Till then, there is always a risk with altcoins such as DOT. But as altcoins had performed poorly in 2024-2025 time period, unless there is a shift in the overall asset share or the market share in the asset class, the most of the risk right now is with Bitcoin and ETH. You can see the market share of Bitcoin and ETH together, roughly speaking 60% and 10%, or over 70% of the overall crypto market cap is held by these cryptos. Again, in the remaining 30%, there is a lot of market share held by stable coins. So if there is a drop in the asset class in terms of the overall market cap dropping of the asset class, if that happens, most of the market share drop would be in proportion. So if, let's say, Bitcoin drops 30%, altcoins would drop 30 to 35%. It wouldn't be like it was in 2022, because in 2021 altcoins rallied a lot more than Bitcoin, whereas in 2025 they did not. That's just an interpretation of all of these models. Yet there is a risk involved with all of the altcoins accumulation. Some of the models are definitely signaling an accumulation phase for DOT, with the caveat of 25 to 40% drawdown in the depths of the 2026 bear market. But if there is an altcoin season, the missing altcoin season that we had in 2025, where there wasn't an altcoin season, let's say one cycle after that there is an altcoin season. In that environment, if the fundamentals of DOT or Polkadot stay relevant, and if there is a growth in the market cap, that could prove somewhere between 8x and 9x of the current price. And with that, I conclude the video. Hope you enjoyed the content. If you did, please give a like and subscribe, and check out all of these charts, not just for DOT but also for other cryptos, one row for each of the crypto on their USD pair. there is also a discussion on or analysis on major cryptos on their BTC pair. So for example, how DOT is doing on its BTC pair. It's going straight down. And what if the trend were to continue or reverse? If it were to reverse, how likely and what would be the percent gain in that dot BTC forecast, or even dot ETH analysis for that matter? So these kind of analysis are definitely available on the Crypto Weekly's chart website, and these are live models, and again use machine learning models and regression based analysis for assets. And again, in the depths of the bear market or in the euphoria phases of the bull market, these analysis do not have a manual intervention. Whatever the models say based on statistical framing is what these chart share without any bias to the upside or to the downside. So with that, again, this is the dot machine learning based forecast in a base case scenario for 2026. If there is one major counter trend rally, how high the price action could go. In the panic case, what could be the low at around $1.18? In a full blown panic case, the bottom for dot could be at around 88 cents. So these kind of analysis are also available, and also individual crypto related indicators such as, is the news sentiment bearish, which is again right now it's really bearish out there. What's the overall bull market completion? It's coming to a conclusion now. The asset, there has been a reset over the last couple of days. You have seen this markets kind of getting reset now that the risk is less than overall accumulation risk for the entire asset class is less than 20%, as that means that the cycle is officially again for all intensive purposes over now that the overall risk is gone less than 20%. What remains to be seen, if and when the overall risk goes less than 10%, that's when serious accumulation related insights make most amount of sense, like they did back in 2022, in the middle of 2022, when this peak valley analysis risk came to a halt or a drop from that lower 20% or lower 10% to less than 10%. So that's the path ahead of us, unfortunately, per the historical analysis. So these kind of analytics are also available. Some of the popular narratives in the wider asset class. What are the things discussed on social media platforms related to crypto? Most of the discussions, even on the crypto related channels or crypto related handles on YouTube and X, are related to either gold or Bitcoin drop or silver rally. So not much related to altcoins right now. Overall sentiment more bearish than bullish. And again, over the last 7 days or last 24 hours, what has been the performance over the last 30 days? Again, 7 days down, 30 days down, 90 days mostly down asset class in a typical bear market. That kind of analysis, what is Bitcoin risk and ETH risk in terms of the current price and current rally. Both Bitcoin and ETH risk have gone down, but again nowhere close to the end of the bear market, where both in unison are less than 10% or less than 5% risk. Right now, Bitcoin risk, ETH risk is at around 13%, Bitcoin risk is at around 6%. So these kind of analysis, again, we discussed the bull market targets and the bear market bottom targets for DOT. So hope you enjoyed these contents and hope to see you again tomorrow. Thank you and have a nice day. Bye-bye.